Your house may already be worthless, and you wouldn't even notice. Not because of a crash, not because of interest rates, not because of anything on the evening news. It's something much quieter, and it's happening in the most boring industry in the world: insurance. Because right now, insurers are pulling out of entire regions. And the part nobody tells you: a house you can't insure is a house you can't sell. To understand why this matters, you need to know what insurance really is. Most people think of it as a bill. Pay it, forget it, hope you never need it. But at its core, it's a giant bet. The company bets that your house won't burn down. You bet that it might. And for that to work, it needs one single thing: predictability. It looks at thousands of houses, runs the numbers, and says, on average, this many will file a claim this year. Predict the risk, set the premium just above it, pocket the difference. For 100 years, this worked beautifully. The problem: this model assumes the past looks like the future. And that's exactly what's no longer true. The risks insurers calculate for, fires, floods, storms, hail, behave differently than they used to. They hit harder, more often, and in places that were considered safe. And when the foundation of your business becomes unpredictable, you don't adapt slowly. You panic. The insurers had 3 options. 1. Adjust prices to the new risk. 2. Keep prices and swallow the losses. 3. Just leave. In region after region, they chose option 3. Some stopped writing new policies, others simply went bankrupt. Elsewhere, the state had to step in. And these aren't small providers, they're the biggest, most well-known names in the industry. An insurer pulling out doesn't send a press release, it just stops. Most people only notice when they try to get insured themselves. You're thinking, fine, then I'll just go to another one. That's exactly where it gets ugly. Because when the big players exit, they don't leave behind a healthy market. They leave a vacuum. It gets filled by 2 things: smaller, unstable providers at outrageous prices and government emergency plans. These were meant as a temporary safety net. By now, in some places, they've ballooned into the largest insurers in the market. To put it politely, the safety net is now holding up the floor. And it was never built for that. But why does this affect you, even far from the coast and the forest? Because this isn't an insurance story. Follow the chain. Insurers leave, coverage gets scarce, premiums explode. And then something breaks that almost no one connects to it: the mortgage. Because anyone with a mortgage is legally required to carry insurance. The bank demands it. It's in the contract. No insurance, no mortgage. And no mortgage means no buyer can finance your house with a loan. Around 90% of buyers need a loan. If a house becomes uninsurable, you cut out 90% of all possible buyers. On paper, it's still worth $500,000. But if no one can finance it, what is it really worth? Price and value have quietly separated. You only notice when you go to sell. And here it becomes a story about everything. A house is, for most people, the largest asset they own, the basis of their net worth, collateral for loans, retirement savings, education fund. The entire system assumes a house is liquid, sellable, stable. Uninsurable houses are not. They're a slow leak in the foundation of wealth. Banks hold these mortgages. Municipalities fund schools and roads through property taxes tied to real estate values. When those values become questionable, it's no longer a problem for individual homeowners. It's a banking problem, a municipal problem, and ultimately, a systemic one. And it doesn't stay in the obvious places. Hail drives up costs across the country. Floods hit areas that were never affected before. The map on which you're safe is shrinking, and most people haven't updated their picture. Why no headline? Because it's not clickable. Insurer adjusts risk models, doesn't stop a scroll. People want a crash in real time, a villain with a name. So everything gets reduced to prices are rising or prices are falling. But the price was never the story. The question is whether the asset underneath can even be sold. That's exactly why this channel exists. The threats that truly change your financial life are rarely the loud ones. Those are already priced in. The dangerous ones are quiet, slow, boring. If you want to understand what lies beneath the headlines,